All right. Now, in the case of this one, we have a break and retest, right? I'm going to do two of them, right? You're going to see how the difference is from this one and the last one. What we're going to cover is what happened when market give you a price action, right? When they give you a bullish engulf and it doesn't buy up right away, right? Let me just draw it out for you. That way you have an understanding of it, okay? So let's just say this right here is a bit too big. Hold up. This right here is our last selling candle, okay? And then we get a bullish engulfing, right? Like so, as you can see, it closed above the red. So let's go ahead and draw that. That way you understand it. Okay. It closed above the red, right? So you would enter here for your buy. Okay. You enter here for your buy. Now, and then of course you're anticipating. Again, the word we're using is anticipating. We can expect it, but cool. But we anticipate, right? We just wait for it. All right. We don't tell the market what to do. So we're going to anticipate for the market to buy up because that's our price action. We took that. Sometimes, even after you take your engulfing price action, in the case of this one, your bullish engulfing price action, the next 4 hour candle the market will give you will look like this. All right. You see that? Boom. So you got a bearish candle, right? But guess what? That bearish candle did not engulf the last bullish candle. So your buy is still valid. Your buy setup is still valid, right? And then after that, typically it does something like this, right? Then it will give you another bullish candle that engulfed the previous one and then to go up. But you have nothing to worry about because you already took the bullish engulfing. Sometimes it just happened to consolidate a little bit for an extra 4 hour, right? So you might be in that same buy for, let's just say, maximum 8 hours, right? It will take a 2 extra 4 hour candles before it start going up. All right. So I'm helping you understand that even after you take your price action, 4 hours later, it could just sit there. Sometimes it may look like it's about doing golf. Well, see, notice that. Let me show you real quick. So we have a selling market, right? Where the market give us lower lows. We already know that. Where each low is lower than the previous low. Okay. And then we got low highs, lower highs. Okay. So that means each high is lower than the previous one. Now we already understand for the market to go from a selling to a buy, the previous structure have to be broken. To be more specific, a low high have to be broken. Okay. So for market to buy, so if the market is selling where it's giving you lower lows and lower highs, right? Just like this, lower lows and lower high. For the market itself to go from a selling market or a selling trend to transition to a bullish trend to a bullish market, a previous lower high have to get broken where the market gives you a high that's previous than that will be a higher high. Once the market retests that previous lower high that it breaks, it will give you a new high low. At that point, market is no longer giving you lower lows. So I'm going to shrink this down a little bit. That way it makes more sense, right? So if this is, okay, this is a lower high right here. So that me just a little bit thicker. Need some meat in the bones. There we go. Can't see them. There we go. All right, so there we go. So that's the previous low highs, and then this is the lower low. As you can see, market breaks like so. Now at this point, let's change the color. We go yellow. At this point now, because of this point, we have now a higher high, right? Because it broke this previous one. It broke it right here. And it went up. Now it's coming back to retest it. Now, when it come back to retest this point, once they give us a PA or bullish engulfing, at this point here, this level here will be considered, okay? Will be considered as a high low, okay? Because it's higher than this low point, all right? Just want to throw that in there. Now, with that being said, market broke structure, right? Came back to retest. Here, we got a bullish engulfing, as you can see right here. It engulfed the last bearish candle. There goes the trigger right here. We pulled that. But guess what happened after, right? Market, instead of just buying straight, the market literally sold it to the point where it sold, right? Where it looked like it had engulfed the previous bullish. But guess what? The word I use is had, meaning it never closed. It went past it. That's what the wick. It went all the way down to generate the wick, and then it closed above it, right? So it did not engulf it. So the buy is still valid. So once again, you pull trigger at bullish engulfing point. That's your entry, right? So again, we look at previous low for a stop loss. This is our previous low. We're looking at the lower low, previous lower low, right? So after we enter here, our stop loss go right here. So that's our SL. That's our stop loss. Okay? Straight to the point. Literally, right? We don't want to overcomplicate anything. Just take it for what it is, okay? Please. All right. And of course, so on and so forth. Just like here, when market come back, when and if it come back here, it give us a PA or price action. After entering here, we look at the previous low for stop loss. That would be this previous high low. All right. So even with a break and retest, we do get a price action that don't just buy up right away, where the market will sit there for 4 hours and then the next 4 hours it'll buy up. Okay. So these are different variations. So again, all of these different variations when it comes to the setup itself, how to buy the market. I do have it available for you. So, buying the market, the ultimate buying setup. It's in the book also. Amazon, take a look at it. All right. And the price action that you need for it. Boom. All right. So let's look at another setup. All right. So in the case of this one, right, it's just like every single setup when it comes to break and retest. Like I went over before, right? We know we have a bearish trend, right? A selling market where it's giving you lower lows to lower highs. Let's change the color. Where it's giving you lower lows to lower highs, lower lows to low highs, so on and so forth, right? And then market hit a point where give us the last lower low here. It bought up to give us a lower high, and it came back to the same lower low, kind of like pretty much to a double bottom, but it never broke the previous low high. So it range or consolidate within that point. Eventually, it gave us a bullish engulf, and this is variation number 3. What do I mean by that? So like I mentioned before, we have different variations of price action. Sometimes you get a price action that engulf the last two bearish candles. So if this is all selling candles, right? These are bearish candles. The market is coming down like so. You see that? These are all selling candles. Boom. And then when market hit the zone, it gives us a bullish engulfing that engulf the last 2. Okay. Sometimes it engulfed the last 3. You know what? Let me show you this real quick. So this is actually a trade that I took on the GBP JPY GJ. I closed it today, held it for the week. I closed it. Let me look this up. Come on, load up for me, please. There we go. I did end up closing it, getting what I need out of it, as you can see. Right? Boom. TP. Oh yeah, TP smash, ladies and gentlemen. So that should have closed by now. So if you see my head turning, that's what I'm looking at. So TP smash, right? So now, in the case of this one, just like I was talking about before, let me point out, where is it? Point out this right here. So we have this double top in a 4 hour. Please understand, this setup is a monthly setup, okay? It's based off a month. If I drop down to the weekly, it will also be a weekly, but also it's also a daily setup. So if you didn't go that far to look at it based off the month, it's also a daily double top. When you drop down to the 4 hour, first hit, and this is the second hit, right? Now, crazy stop hunt, but it did give me my, I have different brokers. Sometimes different brokers give you different price actions, depending on which one you use. I did get my engulfing here. That's where I pulled the trigger and I put the stop loss at the last high because that's what I had. As you can see, let me clear this out real quick. Right? As you can see, the market itself, right? Right? Look how high it went. Look how high it went. So it never wicked me out, okay? Never hit my stop loss, and then eventually it did go based off the trading view to give me a bearish engulfing. Just so, speaking of the price action that we was going over, since we was talking about the bullish version of it, this is a bearish version of it. Now, this one didn't just engulf one. It took engulf 4 or 5 of the last bearish candles, right? So, but what I'm trying to say is a price action is a price action. Your job is to simply read and react. It is not your job to tell the market what to do. The moment you start thinking different or try to tell the market what to do, emotions become part of it. We can't have that when it comes to trading. Emotion is not what we trade with, okay? Cybernetic, all right? We need to trade like a robot, okay? That's why people try to invest on AI, automated trading bots, because the bot just take the same trade you would have taken. You code that bot. Think about it, right? You tell the bot what to do, and it does it for you. So you could do it too. You just got to simply read and react, and that's how you do it. And not only just that, you don't have to be in the chart for 100 hours. Okay, so let's clear up a little bit so I could go over this again. So look, now let's just go simply based off what trading view showing us, right? Market give us a bearish engulfing here, right? It engulfed. This was the last bearish candle, of course, but it engulfed all of this, right? So we did get a bearish engulfing, and that's where we got it right here. Yes, I took that. Okay, got to take it for what it is, man. I took that. The last 4 hours, so it sold for 4 hours, right? That's Friday. It closed right there, and today, as of right today, it's Sunday. Okay, so when you are watching this video, it is Sunday. You will see how the market left this gap. This is what I call the imbalance when market left a gap, right? It left a gap open, went back up, and then here it is this is a daily double bottom. Let me pull that up so you guys can see that, okay? This right here, this zone right here is a daily double bottom base zone. I'll show you real quick. That way you can understand. But before we continue with that, again, I pull the trigger for what it is, put the stop loss at the high, okay? There was no if or but, right? The only reason you don't see the selling, whatever you call it in there, is because I was in the trade earlier. So that was just a second entry, okay? That's all it was, a second entry. So let me show you right here. Like right here, this is a daily double bottom zone. Even though we're a little bit going a little bit off, but let's do this real quick. Let's transition it to the day so you can see what I'm talking about. You see that? Let's stretch it out real quick. Look at that. Boom. Oh yeah. So this is one of my favorite setups, just so you guys can understand the daily. So when I post the video, when I do the video on how to backtest, you will learn to understand that. Look at that. All you had to do is take a daily price action, and that's my favorite type of setup. Oh, that means my setup is always available for me or to me exactly every day at 5 p.m. So after the market closed, I don't even worry about gaps really, because I'm taking this for what it is, because it doesn't always gap, but for the most part, by 7 p.m., the spread close, most gap or close. So right here is a daily bearish engulfing, stop loss at the high. Look at that. Easy money. So when I say this was a daily setup, I believe I went over this under my previous videos. You see that? Okay. Now, with that break and retest, the same thing I just went over, right? A 3 candle price action. Look at that. Who would have thought? Look at that. See it right here? Let me get rid of this real quick. Do it one more time. Make it more cleaner. So we got consolidation, right? Or range and break above. You see right here? Retest, broke. Came back. This right here is a retest. Exactly what we just went over, right? But this time it took 2 bullish candle to engulf. See that? This is your entry, right? Entry here, stop loss at the bottom. Look at that. Boom. All right. It did go your way. I mean, for crying out loud, it bought for 1 day straight. So at any moment in time, you could have put your stop loss in profit. Okay. And then with this, when I say the daily double top, so again, I did post that video up there. when we talk about different variations where the second hit is a little bit higher. Oh man, there's a lot I could go over today, but let's just go back to this because that way we can stay on track. This is crazy. But yeah, so this is the zone range, okay? I'm saying this is that daily zone. This is where it's at right now. I'm not saying it's going to buy. It is not my job to say that. But when and if the market does give me a bullish engulfing off this, I'll take it. I already know there's some form of an imbalance. There's a gap in there. It has to close. I don't know when and if it's going to close it today, tomorrow. I don't care. But my job is to simply read and react if and when it does. All right. That's it. Let's get back to this. That way this video is not too long. Where we at? All right, cool. So just like the same, right? That's exactly what the market is doing right now, right? Broke above instead of just a regular retest of a previous structure lower high. Market went back down to the same lower low to give you some form of a double bottom, right? So we're just looking for a bullish engulfing. Last time the market bought, we got a single bullish engulfing, a single bar that engulfed the last two previous bearish candles to go up. Okay. But guess what? This time around, right? We got a two bullish candle engulfing where it took two bullish candles. Okay. It took two bullish candles to engulf the last bearish candle. Here's our entry point like before. Okay. Now, I didn't put any wick at the bottom of it for a reason, because sometimes we're going to get some setups that's like that, where the wick of it is going to be so very little, something like this, and that is okay. So with that being said, if that's the last low point that we have, even when we look to our left, if we don't have any low point either in between these right here, if we don't have it, we're just going to have to use the current price action, right? Low wick point after we enter our trade. Okay. After we enter, we place your stop loss accordingly, just like that. Okay. So same concept. All right. So it's literally a rinse and repeat. Okay. Rinse and repeat, a different variation as the market start buying up, meaning instead of giving you a last lower low and then a lower high, market stays within a bearish trend where it's still giving you lower highs, but it stopped giving you lower lows. It started giving you high lows instead, but it's giving you lower highs as it buy up to break the main one and the previous small ones that have been giving you in between. Once they break structural point, you see here, boom, came back to the previous low. So it's the same thing when it comes to the double bottom setup aspect of it. Okay. But it's the structure of how it came back down to give you that setup is just different. You know what? That's that's exactly what we just went over. So we're gonna go right back. Okay, we're gonna go back one more time because it's just, I don't know. After a while, it's just this is exciting, you know, because it just repeat the same thing over and over. Okay, so this is the 4 hour, right? So let's bring it in real quick. I'm gonna crunch it up a little bit, make it make sense. All right, stretch it up a little bit. Boom. All right, look at this real quick. You see that? Let's go ahead and stretch the zone out to match current market location, okay? All right, so I'm using the last wick of it. Okay. All right. So you see that, right? It's like before where the market comes to give you that retest in some kind of way, right? Instead of bouncing off here or here. Oh, let me back out. Hold up. Right. Instead of respecting this point here or just this structure point zone area here, as you can see, after it give you this double top aspect, right? Boom. Instead of, it didn't retest any one of these. Instead, it dropped all the way back down. So again, exactly what I'm going over right now for the last setup is exactly what I am anticipating. Hopefully the market give me so I could just take that buy. Okay. And just like before, hopefully, that's a big hope. Okay. After I take my price action for what it is, like I said, just throw a little prayer out there, of course, but take it for what it is and let it play out for you. Okay. Remember, the market is going to do what the market does. Okay. Your job is to simply read and react. Okay. Now, God first. Always do that first, though. But God first, and you're going to be just fine. All right. So, that's crazy. But yeah, this is literally what I'm waiting for it to simply read and react. Now, I'm not saying that it will. I hope that it does. But if it does, let me show you how that would look like, okay? This right here is our last bearish candle, okay? This candle right here. So our bullish candle will look like this if the, by the way, just so you know, for me, my price action will be available exactly at 5 a.m. Because right now, it's what is it? It's 11:49 p.m. Right? So this candle, this yellow candle right here, this bearish candle right here will be done. It will close exactly at 1, right? From 12. So it'll 12, 1 a.m. Right? So from 1 a.m. to 5 a.m. will be the next candle time to close. So when I wake up at 4:55, it give me 5 minutes to just wake up, get myself together, and see if I have a bullish engulfing. If I have it, that'll be it. Okay. So I'll pull the trigger, right? So look at that, right? I'll be using this. See the wick right here? I'll be using this wick as a stop loss. That's it. So, all right. This is it gets exciting after a while, Um, I'm getting too distracted. But it gets so easy and simple. Just yeah, man. But yeah, so in the case of this, we have like before, the opposite of what we just had, where you have one bullish candle that engulf the last two bearish candles. You'll pull the trigger accordingly like this to go up. So let's generate that for you real quick. Here, bearish candles. Okay. Boom. That's all the last bearish candles. And there goes your bullish candle. Like so. Engulfing the last 2.5. And then that will be your entry point. Okay. You enter here. And just like before, wick to the bottom for stop loss and then targeting the next structure high. Okay. In my case, I'm targeting somewhere within here because that's what the little gap is. So let's just see how that goes. All right. But yeah, with that being said, I think that's it for us today. I don't want to go for too long of a time. Okay. Yeah, that's not be too long of a video. But with that being said, please understand rule number one when it comes to trading, your setup itself has to be based off the highest time frame, which are one, the monthly, the weekly to the daily. So that's from the highest to the lowest high one. Okay. Is that the best way to say it? Your three highest time frame, the month being the highest, and the weekly being the second highest, and the daily being your third and final highest, right? So that's rule number one, setup itself. Rule number two, the time frame that you are using to pull the trigger, the 4-hour time frame, right? Very simple, no if or but. And you will get a double bottom or a double top or a breaking retest within that same time frame. Now, rule number three, match the same rule number two, because the 4-hour time frame is where you're looking to execute, is where you're looking to pull that trigger. Guess what? You're taking a 4-hour price action, which is the engulfing price action. Okay. Remember, available on Amazon. Please grab that. Show me some love. And then the last one, which is rule number, well, actually, no, I'm lying. Rule number three, the price action, the engulf. And then rule number four, which is the very last one, your stop loss. Please always place your stop loss where it belongs. That is the previous low. Okay. Where it belongs. And as always, don't over leverage. Okay. So with that being said, I appreciate y'all. Okay. Thanks for the like and the comments. And thank you for the sharing. I really, really appreciate that. I am new to this. I'm getting better at it every day. So thank you for the love. Again, if you are interested of bettering your trading strategy and you want to sleep more, spend more time with your family, this is the system that works. I guarantee you that this system, yeah, you have at least a 95% winning rate. Yeah, literally. 95%. I laugh because it's true. It's funny, but it works. It becomes so easy. All right. Some people call it boring, but it works. Boring is good because you have so much time in your hand. Okay. Just take it and take a step back. Let the market pay you. All right. So, ultimate price action for execution, buying setup, every setup that you need to understand when it comes to buying the market. Ultimate stop loss, where to place your stop loss, the discipline paradox, the psychology that you need to have when you need to become. Well, actually, this works for everything really. This is the psychology that you need to have to become a successful trader itself. Okay, profits varies. Everybody's different. Okay, I'm okay with $1,000 a day. And mastering the bearish forest, every single selling setup that you need to learn to understand. It's in this book with the price action. Come on. Success in Sight Volume 1. It's a workbook that help you understand how to mark every market structure, the zone, the trend line, how to properly understand how to mark those. Okay. It's a 60-day book challenge. By the time you finish with that, oh man, you will trade like a pro. In volume 2, Success in Sight. So that covers everything that you need to understand about buying the market, all the zones, or the trend line, the fib, okay? The higher highs and the higher lows, so on and so forth. Hands on, 60-day, 500 500 pages. All right. So I'm looking to see you guys in the next video. Again, like before, please like, comment, and subscribe. I really, really appreciate it. So with that being said, okay, Royal TFX Academy, we out. Boy.